Each morning my study of the tape begins with the same focused intent. Not in a search for some fleeting opportunity, but to prepare my mind for the business of the day. The market is an impersonal mechanism. It has no regard for your financial needs, your personal aspirations, or your theories of value. It is an arena where the disciplined operator profits from the errors of the undisciplined public, where sound principles overcome impulse, and where your greatest adversary is not a bear market or a bull market. It is the chorus of your own hopes and fears, whispering unsound counsel. I have learned this through costly tuition, more times than I care to recount, and each lesson was paid for with a substantial portion of my capital. But what I have gleaned from these hard-won experiences is this. Success in market operations is not contingent upon discovering some foolproof method or the most popular security. It is determined by the mental framework you establish for yourself before the opening bell, before the day's campaign begins. Every morning, before my attention turns to the market itself, I conduct a mental review of my core principles. These are not hollow affirmations meant to inspire false confidence. They are objective truths, the kind that dispels the fog of greed and fear. I state that I am here to interpret the market's action, not to impose my will upon it. You see, the average man approaches the market with a preconceived opinion of what it should do. He has become attached to his analysis from the prior day, committed himself emotionally to a position, and convinced himself he has deciphered a hidden code. That is not speculation. That is a wager based on vanity. The market owes you nothing. It is indifferent to your charts, your research, or your intuition. The market simply reflects the balance of supply and demand. Your function is to observe this action clearly, without the distorting lens of your ego. I tell myself, my capital is my reserve force, and I cannot conduct a campaign without it. Every dollar in your account is a soldier in your service. Would a prudent general commit his entire army to a single decisive charge against a force he does not fully understand? Yet, this is precisely what inexperienced traders do daily. They perceive what appears to be a favorable setup and risk their entire capital on a single idea, a single operation, a single moment. I have been ruined 3 times in my career. 3 times I have built a fortune from the ground up, and 3 times I have lost it. And on each occasion the cause was a failure to adhere to this foundational truth. The preservation of capital precedes the pursuit of profit. You cannot compound your capital if you have no capital left to compound. Each morning I reaffirm that my primary duty is not to make money, but to avoid the unintelligent loss of money. I will wait for the opportune moment. This is perhaps the most critical principle borrowed from the wisdom of sport, though I am no athlete. In baseball, a great hitter has the discipline to wait for the right pitch. In the market, you possess that very same advantage. Yet most traders behave as if they are penalized for inaction. They see movement and feel compelled to participate. They hear of others' profits and are consumed by the fear of missing out. But the market is a continuous stream of opportunities. The great campaigns, the ones that build fortunes, do not present themselves every day or even every week. They emerge when conditions are unequivocally favorable, when the trend is clear and powerful, when the probabilities are so heavily weighted in your favor that to refrain from acting would be the greater error. Until that moment arrives, my duty is to wait, to observe, to remain liquid and prepared. I remind myself each morning, the trend is my only guide. Not hope, not pride, not a desire to recoup a loss. The trend. When I study the tape, my goal is not to outwit it or to forecast its turning points. I'm simply trying to understand what it is communicating at this present moment. Is money flowing into this stock, or is it being distributed? Are buyers acting with conviction, or are they hesitant? Is the price establishing a clear upward or downward path, or is it moving aimlessly? The market speaks in a clear language to those who will listen without prejudice, But most do not listen. They argue. The tape indicates a downward move, and they say, "But it should not be so, therefore I will buy." The tape signals a clear advance, and they say, "It is too high, therefore I will sell short." This is folly. This is ego in conflict with reality, and reality is always the victor. Every morning I commit myself to humility before the verdict of the tape. I will not force my opinion on the market. I will seek to identify where the market's own intention is clearly expressed and align my operations with it. I trade the patterns, not the company. This distinction is paramount. When you become enamored with a particular enterprise, when you convince yourself that its story or its product makes it special, you have ceased to be a trader and have become an investor with a trader's short-term expectations, a perilous combination. To me, the narrative behind the stock is irrelevant. I am concerned with one thing. Is the stock acting correctly? Is it demonstrating strength when the general market is weak? Is it consolidating its gains while others are relinquishing theirs? Is it leading its group or lagging behind? The story may be compelling, but the price and volume action reveals the truth of what large, informed interests are actually doing. And these interests, the professionals, the institutions, the composite man, are better informed than you are. They always have been and always will be. Therefore, rather than attempt to be cleverer than they are, I simply observe the evidence of their operations in the tape and follow the patterns of accumulation, markup, and distribution. These patterns repeat with remarkable consistency because they are rooted in human nature, which does not change. To truly internalize these concepts, the serious man must return to the source. The foundation of modern technical analysis is contained within Richard Wyckoff's masterpiece, How I Trade and Invest in Stocks and Bonds. This is the original timeless wisdom presented in the annotated edition by Max Davidson. The annotations provide necessary context and clarity for the modern environment, ensuring the original principles of trading as a serious business, risk management, and judging the market by its own action are preserved. The link to this book is in the description below. Every morning I also affirm this. My emotions are not reliable indicators. Fear and greed are powerful motivators, and they will invariably lead to ruin if allowed to influence judgment. Fear will cause you to close a profitable position prematurely, securing a minor gain when a major one was developing. Greed will cause you to hold a losing position far too long, hoping for a recovery, or to add to a winning position recklessly after the primary move is complete. Both emotions present themselves as prudent counsel. Fear whispers, "Secure your profit now, be safe," when the correct action is to let your profits run. Greed insists, "Add more, it is certain to go higher," when the correct action is to protect your gains. I have learned that the moments when I feel the most confident, the most certain, are precisely the moments that demand the most caution. That is when I pause, step back, and ask, am I following my tested principles or am I acting on a feeling? The principles exist because calmer, more objective versions of myself establish them. My emotional self in the heat of the moment is the least qualified to make sound decisions. I will honor my stops. This rule is absolute, yet it is the one most frequently violated by the public. Why? Because honoring a stop is a direct admission of an error in judgment. It means accepting a loss. It means acknowledging that your analysis, timing, or execution was flawed. No one enjoys being wrong. But in this business, being wrong is an integral part of the process. The most successful operators are wrong a significant percentage of the time. What distinguishes them is not their win rate, but their ability to limit the size of their losses while allowing their profits to grow. For every trade I enter, I know the exact point at which the premise is invalidated. I have defined it in advance, and when the market reaches that point, I exit, without deliberation, without negotiation, without hope. Because I know one thing for certain. The market can remain illogical far longer than I can remain solvent. Holding on and hoping has dismantled more accounts than any market crash. Each morning I review these declarations not once but several times, allowing them to anchor themselves in my mind. I am conditioning myself for sound judgment, much as a pilot runs through a pre-flight checklist. It is not an exciting process. It is not glamorous, but it is effective. Because when the market opens and the tape begins to move, when prices are fluctuating and the crowd is reacting emotionally, there is no time to reason your way to a correct decision. You will revert to your conditioning, to the mental habits you have ingrained. And if you have spent your mornings reinforcing discipline, patience, and respect for the market's action, those qualities will guide you under pressure. But if you have spent your mornings indulging in fantasies of profit or searching for tips, that is the behavior that will emerge instead. The transition from a losing trader to a consistently profitable one is not about finding superior indicators or more complex strategies. It is about becoming a different kind of operator. One who can see a profit accrue on the screen without becoming euphoric and watch a position move against him without panicking. One who regards a series of wins and a series of losses with the same emotional detachment. One who measures success not by the day's profit or loss, but by his adherence to his method. Because here is the secret that took me years and fortunes to fully comprehend. If you execute your process with consistency, the profits will eventually take care of themselves. The market rewards consistency and discipline over time. It relentlessly penalizes inconsistency and emotion. There are no exceptions to this law, regardless of one's intelligence or effort. People ask what separates the professional operator from the amateur. It is not intellect, not work ethic, not even the size of one's capital. It is the ability to be comfortable with uncertainty. The amateur requires assurance. He needs to feel certain a trade will be profitable before he enters. The professional understands that every operation is a matter of probability, nothing more. He is comfortable committing his capital when the odds favor him, knowing that any single instance may result in a loss, but that over a series of trades, playing the percentages will yield a net profit. The amateur craves action. To him, sitting in cash feels like wasted time, like missed opportunities. The professional knows that cash is a position, and often the most prudent one, and that patient observation is frequently the most profitable activity available. The amateur trades for stimulation, excitement, vindication, the thrill of the game. The professional trades to generate profits, and he has learned that strong feelings and sound judgment are rarely found together. What you affirm to yourself in those quiet moments before the day's business begins, that determines the outcome. Because trading is not really about the market. The market is merely the field upon which your internal state is made manifest in financial terms. If you are undisciplined in your life, you will be undisciplined in your trading. If you are impulsive in your personal affairs, you will be impulsive in your entries and exits. If you are not honest with yourself about your own weaknesses, the market will expose them without mercy. This is why I say that the market is the most expensive and effective teacher of self-knowledge. It will reveal everything about yourself that you have tried to avoid, and it will charge you tuition in the form of losses until you have learned the lessons. I recall the morning I was ruined for the third and final time. I awoke that day feeling invincible. A string of successful trades had inflated my account and my ego. I had convinced myself that I had finally mastered the game. I neglected my morning review. I did not recite my principles. I did not remind myself of the very rules that had led to my success. I simply opened my ledgers and began seeking opportunities, filled with a confidence that bordered on arrogance. By the end of that week, my capital was gone. Not because the market had changed, nor because my strategies had ceased to be effective. It was because I had changed. I had ceased to be the disciplined operator who had built that fortune and had reverted to the reckless gambler who had lost the previous ones. That pain, that humiliation, that crushing realization that I was the sole architect of my own failure, that is when I truly understood the power of this morning practice. Since that day, I have not missed a single morning. Even when I am not actively trading, when the markets are closed, when I am traveling or ill, I conduct my mental review. Because I know now that discipline is not a quality one possesses. It is an action one performs daily without fail. The moment you believe you have arrived, the moment you think you are beyond the fundamentals, is the moment you have begun your decline. The market has humbled far greater men than I, and it stands ready to humble you too if you provide the opportunity. Your morning practice is your defense against your own worst impulses. I also tell myself each morning, I will not trade to recoup a loss. This may be the most difficult rule to follow because it requires overriding one of the most powerful human instincts, the desire for retribution. When you take a loss, especially one that stings, your every impulse is to re-enter the market immediately and win that money back. Your ego is wounded. You feel a need to prove that the loss was an anomaly, that you're not wrong, that you can conquer this market. But this kind of trading is a form of financial self-destruction. It is operating from an emotional deficit, not from a sound strategic footing. It is forcing trades that are not present because of a psychological need, not because the market is offering a genuine opportunity. I have seen men dismantle in hours what took them years to build, all because they could not accept a loss and move on. Every morning I commit to accepting losses as a routine cost of doing business, as unavoidable as rent or utilities. And I promise myself that I will never allow my ego to endanger my capital. I will scale into positions, not plunge. This is a lesson learned through bitter experience. Early in my career, upon identifying what I believed to be a prime opportunity, I would commit my full line of capital at once. Sometimes I was correct, and the profits were swift. More often I was simply early. The opportunity was genuine, but my timing was off by days or weeks, and because I was fully committed, I had no reserve capital to add to the position when it finally began to move, or to average my cost at more advantageous prices. Worse, when I was wrong, I was completely wrong, with my entire account exposed to a single failing idea. Now, each morning I remind myself to enter positions gradually, to test the market's response first, adding to my line only as the action of the market confirms my initial judgment. This method means I rarely capture the absolute bottom or top of a move, but it also means I survive the times I'm wrong. And survival is the prerequisite for all success in this business. I am not competing with anyone but the man I was yesterday. The habit of comparison is destructive in this field. You see another operator post of a great success on social media and feel inadequate. You hear a story of a friend who made a fortune in some stock and feel you are falling behind. But trading is not a race against others. It is a contest against your own weaknesses. The only question that matters is, am I a more sound operator today than I was yesterday? Am I more disciplined, more patient, more consistent? Am I repeating the same errors, or have I learned from them? When I focus on this question instead of on others, I find peace and I find progress. Someone else's success or failure has no bearing on my own. We are all playing different games with different capital, different methods, different risk tolerances, and different objectives. The only person I must outperform is the version of myself who allowed emotion to override judgment, who allowed greed to override risk management, who allowed ego to override reality. These morning declarations are not magical incantations. They will not turn losing trades into winners. They will not grant you special insight into the market's direction. What they do is far more valuable. They prepare your mind for the psychological demands that trading entails. They reinforce principles that you already know but which are easily forgotten in the heat of battle. They cultivate a mental state conducive to sound decision-making rather than reactive, emotional trading. Over time, they change who you are at a fundamental level. You become the kind of person who follows his rules even when it is difficult, who remains calm when others panic, who sees opportunities where others see only chaos. I want to be perfectly clear about something. This morning practice will not make trading easy. Nothing will. The market's function is to transfer wealth from the many to the few, and it is exceedingly efficient at this task. What this practice does is give you a fighting chance. It places you in the small minority of operators who approach this business with the seriousness it deserves. Most people treat trading as a hobby, a game, something to be done casually alongside other pursuits. Those people provide the capital for the accounts of professionals. They are the liquidity that allows the market to function. They are a necessary part of the ecosystem, but you do not want to be one of them. Every morning, I also make this commitment. I will continue my studies. The moment you believe you know everything there is to know about the market is the moment you guarantee your eventual failure. The market evolves, technology changes, new participants enter with different motivations. Regulations shift, economic conditions transform. What worked last year may not work this year. What worked this morning may not work this afternoon. I read constantly, not just about trading, but about psychology, history, and human behavior. I study my own trades, keeping detailed records not just of what I did, but why I did it and my mental state at the time. I analyze my successes to understand what I did correctly, and I analyze my losses to understand my errors. This commitment to continuous improvement is not optional for the serious trader. It is the price of remaining in the game. I will not confuse a bull market with genius. This is perhaps the most humbling principle, and it is especially important during prosperous times. When everything is advancing, when you are making money on nearly every trade, it is easy to believe you have mastered this business. It is tempting to increase your position sizes, take on more risk, become more aggressive. But a rising tide lifts all boats, and your success may not be due to your increased skill. You may simply be fortunate enough to be operating during highly favorable conditions. I have watched countless traders build fortunes during bull markets only to return it all and more when the tide turned. They mistook being in the right place at the right time for genuine ability. They did not realize their success was environmental, not personal. When the environment changed, their true skill level was revealed. Every morning I remind myself to remain humble, to recognize that much of my success comes from aligning with larger forces beyond my control, and to prepare for the day when those forces invariably shift. The greatest advantage I possess over the average trader is not my experience, though that helps. It is not my capital, though that provides a cushion. It is my willingness to do nothing when there is nothing to do. Most traders are addicted to action. They feel they must have a position to be trading. They cannot sit in cash without feeling anxious that they are missing something. But the most profitable trades I have ever made were preceded by long periods of patient waiting, of observing, of refusing to participate in indecisive, choppy markets. When the market is confused, when there is no discernible trend, when volatility is erratic, the correct action is to do nothing, absolutely nothing. Preserve your capital, preserve your mental energy, and wait for clarity. The market will tell you when it is time to act. It will present a clear trend, a clean breakout, an unmistakable pattern of accumulation or distribution. Until that moment, sitting in cash is not a wasted opportunity. It is the highest return action available. Here is what I have learned about losses, and this is something I review constantly. Losses are information. When I take a loss, I am not failing. I am learning where the market has no interest in going. I am discovering where my analysis was incomplete. I am receiving direct feedback on my timing, my entry, my position sizing, and my risk management. A properly managed loss is one of the most valuable events that can occur, because it tells you something true about the current market environment. The operators who never lose are the ones who never trade. Everyone else in the arena experiences losses regularly. The difference is that professional traders keep their losses small and allow their profits to become large, while amateurs do the opposite. They allow small losses to grow into large ones through hope and denial, and they cut their large winners short through fear and impatience. I tell myself every morning that my ego is not an ally in this business. The ego desires to be correct. It wants to prove its intelligence, its insight, its superiority. But the market has no interest in any of that. The only thing that matters is whether your account is growing or shrinking. And the ego will cost you money far more often than it will make you money. When I am wrong, I must admit it immediately and exit the position. When I am right, I must remain humble and recognize that there was likely an element of good fortune involved. The ego wants me to remain in a losing trade to avoid admitting an error. The ego wants me to add to a losing trade to prove I am right. The ego wants me to boast about winners and conceal losers. I have learned to recognize the voice of the ego and to do the precise opposite of what it advises. This is not natural. It requires constant vigilance and practice, which is why it is part of my morning routine. So, develop your morning practice. Stand before yourself in honest appraisal and speak these truths until they become part of your operating system. Remind yourself that you are here to follow, not to lead. That capital preservation is the foundation of all future gains. That patience is rewarded and impulsiveness is punished. That the trend is the only reliable guide you have. That patterns are more important than stories. That your emotions are designed for survival, not for speculation, and must be acknowledged but not obeyed. That stops are inviolable and must be honored. That you are competing only with yourself. That learning never ceases. That losses are tuition. That your ego is not your counsel. Do this every morning without exception, and you will notice something remarkable. Over time, you will need the reminders less, because these principles will have become who you are, rather than something you must remember to do. The greatest gift the market has given me is not money, though I have made fortunes, lost them, and made them again. It is the gift of self-mastery, or at least the lifelong pursuit of it. Every day the market provides immediate, honest feedback on the quality of my judgment and the strength of my discipline. There is no one to blame and no one to credit but myself. This pure accountability, this direct relationship between cause and effect, has made me a better man, not just a better trader. It has forced me to confront my weaknesses, to build systems that compensate for my limitations, to become more than I was. And here is what I know with absolute certainty after decades in this arena. You have that same opportunity. The market does not care about your background, your education, or your social standing. It cares only about one thing. Can you master yourself? Every morning when you speak these truths, you are doing more than preparing for the trading day. You are declaring that you refuse to be average, that you refuse to let your emotions squander your capital, that you refuse to quit when the work becomes difficult. You are joining a small fraternity of individuals throughout history who understood that the path to external success runs directly through internal mastery. The market will test you. It will tempt you with easy gains that vanish if you chase them. It will frighten you away from genuine opportunities with volatility and noise. It will punish your ego and reward your humility. And through all of this, the only thing you truly control is your response. Not what the market does, but what you do in response to what the market does. That is where the campaign is won or lost, in that space between stimulus and response. In that moment when you choose discipline over impulse, patience over action, process over outcome. This morning practice is my gift to you, earned through pain, failure, and years of costly lessons. I am sharing it because I remember what it was like to be without capital, to be confused, to be overwhelmed by the market's complexity and my own emotional turmoil. I remember the desperation of wanting to succeed but not knowing how, of possessing the desire but lacking the discipline. If you are in that place now, know this: you can change. You can become the operator you need to be. But it begins not with a new strategy or a tip or a better indicator. It begins with who you are when you wake up each morning and what you tell yourself before the battle begins. The words you speak to yourself in those quiet moments are the foundation of everything that follows. They are the difference between a professional and a gambler, between a career and a catastrophe, between the person you are and the person you are capable of becoming. Say them with conviction, mean them, live them. And when you fail, because you will fail, we all do, say them again the next morning, and the morning after that. Because success in this business is not about perfection. It is about persistence. It is about recovering from losses, maintaining discipline through winning streaks, staying humble when you are right and calm when you are wrong. If you found value in what I have shared today, I want you to do something for me. Leave a comment below and tell me which of these morning declarations resonates most with you, or share your own morning practice if you have one. Let's build a community of serious traders who are committed to mastering this craft. And make sure you watch the other videos on this channel where we dive deeper into specific strategies, market timing, and the psychology of trading at the highest level. This isn't entertainment. This is your education, your transformation from amateur to professional. The market is waiting, and it is utterly indifferent to whether you succeed or fail. But I am not indifferent. I have walked this path, paid the tuition, and learned the lessons. What you do with them is up to you. Say these words every morning, mean them, live them, and watch as your trading and your life transforms completely. The person you are today is not the person you must become to succeed in this business. Start building that person tomorrow morning, and every morning after. Your future self, the successful trader you are meant to become, is waiting for you to show up and do the work.